Hey everybody, welcome back to part three of a view of what's in my retirement portfolio. This time we're going to take a look at exactly what ETFs I hold in my overall retirement portfolio. And from previous videos, the retirement portfolio is held in a series of accounts between myself and my spouse in RIFs, in tax-free savings accounts, in non-registered accounts, and whatnot. But here we're actually just in aggregate looking at what specific ETFs we hold. The pie chart here tells the story. You will see that the largest holding is in an ETF that may be unfamiliar to you, which is AOA. AOA is bought and sold on U.S. stock exchanges and held in U.S. dollars. So many of you, may not be in that situation, but in the interest of completeness, I figured I'd show you, what's in everything. AOA looks like this. AOA is an all-in-one ETF, which actually holds thousands of individual stocks and bonds within its portfolio. 80-20 means 80% equity and 20% bond type products. And from the holdings, you can quickly see what's in it, right? You start with something like IVV, which is the overall US market, and 46% of the fund is invested there. IDEV is the MSCI International Developed Index. So that is everything outside of the US, and this includes a bit of Canada. By my calculations, it's about 9% of this IDEV fund is in Canada. Then you have the total US dollar bond market, so 16% there. And then you have emerging markets. So this is stuff outside of the G7. So, China, India, and high growth markets like that. And then the rest, is just some smaller holdings and smaller stocks, some international bonds. But like all-in-one ETFs, AOA basically is a set it and forget it kind of investment. You put your money in, it automatically rebalances to maintain 80-20 through the year. I think AOA does that quarterly. But in any case, I pretty much don't pay attention to it. I invest it and forget about it. Next up in the pie chart is the big chunk in red there, which is XGROW, about 19% of the portfolio. And really simply, XGROW is more or less the equivalent of AOA, except with a much stronger Canadian bias, since it's bought and sold on the Canadian markets. And if you take a look at what's inside XGROW, you kind of get a similar picture, right? The number one holding is in ITOT, which is the total U.S. stock market. So 35% of XGROW is in the U.S. market. Then you have another 20% or so in the MSCI EFI, which is the G7 outside of Canada. And then you've got XIC, which is a very popular Canadian ETF, which mirrors the TSX 60. It's a capped index, which means that if you get a Nortel-like situation, for those of you old enough to remember Nortel, it'll actually cap the holdings of any one particular stock so that you're not overexposed to any one particular company in the Canadian market. The Canadian market's already small enough. You don't need to be making huge bets on one particular company there. And then some bond stuff, emerging markets, and so on. In any case, it's pretty much what AOA would look like in the Canadian market. And XGROW, is the go-to choice, another all-in-one that does the automatic rebalancing for you. You invest it, you forget about it, and life is good. Outside of those two big ones, there's a couple of other interesting ones. HXT in the yellow here is sitting at about 7%, and HXT is a kind of a special case that I use in my non-registered accounts. And when you take a look at the description, you'll see perhaps why. HXT is essentially the S&P TSX 60 index. So it's the Canadian stock index. Uh, the fancy thing about HXT is that it is an ETF that is designed for people not looking for regular distributions. What that means is it does not pay dividends, it does not pay interest. All of that is buried in the price of HXT. And now you may wonder why a fund would do that. The reason to do that is to hold it in a non-registered account, because otherwise every year you're going to be paying taxes on capital gains that the stocks within the S&P 60 pay you. You're going to be collecting income from dividends, which you have to pay taxes on, and so on. So HXT, uses a special vehicle to do that in order to bury all that stuff. So you never pay dividends, you never pay capital gains until you sell it, which makes it a really good choice for retirement. As I'm starting to wind down my position in HXT. I now realize the capital gains I've been deferring for the last, 15, 20 years. And those are handled much more fairly from a taxation perspective, especially in retirement, where I'm not making as much money as I used to when I was working for a living. So HXT is sort of one of those things that um, is possibly of interest in a non-registered account for some of you out there. Um, I guess there are some other sort of legacy things that I'm not going to get into the nitty gritty details because it's all small stuff and mostly in my non-registered accounts. But I did want to highlight both ZMMK or ZMMK, I should say, and iCash, which are collectively about 5% of the portfolio. Um, and in my retirement world, about 5% of my holdings is held in what I consider cash, which is, actual cash, or they are invested in one of ZMMK or iCash. So what are those? So iCash is an American, again, a US dollar fund, which is, it's not a money market fund, but it's awfully close to one. Because what they do is they invest in very, very short-term loans. And, I do this, to try to boost the gains of the cash sitting around, um, in my provider, which is Questrade. They don't pay anything on cash balances. So unless you're invested in something, you're not making any money off of that stuff. And so iCash is sort of my choice there. And the performance is not off the charts, right? In 2024, it had a total return of 5.5%. 2023 the same. This sort of mirrors what the overarching interest rates are out there, and the U.S. interest rates, if you've been paying attention, are quite a bit higher than Canadian rates right now. They have been much slower to cut their interest rates than we have here in Canada, and that's reflected here in the performance lately. As the U.S. Fed starts to cut their interest rates, I would expect the performance of this to decline more or less in lockstep with that. Um, the Canadian equivalent that I've identified is a money market fund called ZMMK. It's a BMO fund, and they're kind of in the same boat. Their returns are not going to be as high as the U.S. equivalent because or Canadian interest rates have been lower than the U.S. for quite some time. But it's still better than sitting around doing nothing. I'd always prefer to earn some money than none from here. And both of these money market or short-term bond funds pay out monthly. So I have a steady flow of new funds coming into my retirement account. Now, I should say that the reason I have moved to iCash and ZMMK is because my provider, Questrade, doesn't allow you to buy what are collectively called high interest savings accounts. Um, if I had, all things considered, I would probably prefer to park my money in high interest savings accounts and on the moneyengineer.ca, you can actually take a look at all of the high interest savings accounts out there, which are generally available through purchase via your online broker, except Questrade, who doesn't actually have these, or maybe they do, but they charge you, I believe, $10 a transaction. And when you're dealing with small amounts of money frequently, those transaction charges can certainly add up, and I wouldn't recommend it. My previous provider, QTrade, allowed you to buy any and all of these, which is where the list came from. BMO Investor Line, I know, also has their own line of high interest savings accounts, which are somewhat comparable to these, but like the iCash and ZMMK, these are all pretty much dictated by what the Bank of Canada is charging or the U.S. Fed is charging for loaning money overnight. So as those rates get cut, you would see these rates follow along um, in some degree. So when I first started buying these over a year ago, the rates of return were much higher, especially in Canada. In Canada now, they're quite a bit lower. King of the Hill right now in Canada is B2B Bank. Last time I checked, which was just a little over a month ago, 2.2 and 3/4% on your savings. Anyway, I hope that's been a useful look at what's in my retirement portfolio. This doesn't change much on a month-to-month basis, but over time, I think you'll see, minor changes, and I'll probably revisit this at some point in the not too distant future. Thanks for watching.